Monday, July 17th, 4:52 p.m. New York time. U.S. stock markets close. Now I'll do a review for my day trade. My day trade was on the S&P 500 using options that expired today, referred to as Zerodte. So we're looking here at the desktop trading platform, Thinkorswim, owned by Charles Schwab. We have 6 grids here. Top 3 grids, each the daily time frame. Each candle represents 1 day. Top left, S&P 500. Top center, NASDAQ 100. And top right, Dow Jones Industrial Average. So the middle index, NASDAQ 100, and the index on the right, the Dow Jones. These 2 indexes are part of the S&P 500. Whereas the NASDAQ is much more tech heavy, where the Dow Jones is very diversified, but with a bigger percentage, let's say, of banks, manufacturers. So down here is the stock symbol, SPY. It's a stock ETF that mirrors the cash index, SPX. Bottom left, 5-minute, the middle center, 15-minute, and the bottom right, 30 minutes. First trade in the morning, my place was bearish, using, again, options, bear call spreads. So looking here on the 5 minutes, the yellow arrow is where I went short, selling call options, placing a bear call spread, and selling call options, shorting a strike on a call option is bearish. That means I want the underlining, happened to be here, the underlining S&P 500, stay below my short strike. My short strike was 450. I placed it at where I got filled at 9:52 a.m. My delta was 37. It went down for a little bit, had gains, didn't work out, went against me, getting closer to my short strike. I closed it before it actually hit that short strike. And then, thank goodness I closed it, because if not, I would have had more heat. Yeah, so I took a loss. I was wrong, licked my wounds, reevaluated, and then loaded up the other side. Yeah. This side was on the puts, but again, selling put option, making a credit spread, shorting a put, selling a put, same thing, selling, shorting a put, is a debit trade. And it's a bullish debit trade, which I wanted to stay above my short strike. My short strike was 449, 32 delta, got filled at 1005. And it just happened to stay above my short strike the whole day. It already closed. And these are high deltas, very aggressive. Lower deltas would be further away. But I felt pretty confident on both these trades. But again, I was wrong. Licked my wounds and closed my first ones. I was right at the beginning. Again, it went my way. I had gains. But my working order was to have closing more than the gains that went there. Yeah. So this order, this one, the 1005, in hindsight, I was too aggressive for the first trade, because typically, if you look at most of my day trades on Zerodte, on average, most of them are between 10 a.m. and 10:30 a.m. I place. I did this trade too early. Shame on me. I was too cocky. Maybe that's one word. But I realized what I did wrong. And I learned from it. But also, I accepted I was wrong and closed it. Took the loss. Now this trade here, the bullish one, instead of doing as soon as I got filled, I did put a working order and close with 50%. But the way the markets were going, at that time, the Dow Jones was a green candle. Again, these candles no longer represent in the morning because they're done, but the Dow Jones was a green candle when I was placing this bullish trade. The NASDAQ 100 and the SPX, they were both yellow candles, inside candles. So they were indecisions, but I saw the Dow was strong. And my thought was, hey, we might test the high or break above. So I'm going to babysit this trade and stay on longer. Instead of closing at 50% gains, because typically I close between 30 to 50% for profit. And I stayed in. So again, my loss here versus my profit has me as a profit for the day. Yeah, so I took a loss again, but my profit outdid my loss. Max profit. Very good. And looking at these indexes up here, notice right off the bat, each of these closed green for the day. They each made new highs for the year. Bullish bias. Very nice. Again, the markets are overextended. Does not mean they won't go higher, but I'm using caution because my swing trades were looking for opportunities to trade bearish. Again, this was day trade, so I have the flexibility of not being concerned what happens overnight, what happens over the next day, the next week, because again, it's in and out the same day. Hence, that's why it's called zero DTE. Options expire the same day. Yep. Same thing, watch and repeat, process next day. It can be done with all three individual one of these indexes, but I lean mostly towards the S&P 500.